International Business Machines Corp. is not progressing fast enough for many investors in its quest to become more of a cloud, artificial intelligence company, as their reaction to its first quarter results demonstrated. Earlier on Tuesday, IBM IBM 1.91% reported first-quarter earnings that appeared to beat Wall Street's consensus expectations, with adjusted earnings per share of $2.45 a share on revenue of $19.07 billion, compared with estimates of $2.42 a share on revenue of $18.83 billion. Revenue grew slightly from the year-ago period, up 5% for the second consecutive quarter. But as Daniel Ives, head of research at GBH Insights noted, the beat was thanks to a one-time tax gain of $817 million in the quarter. In addition, IBM Chief Financial Officer James Kavanaugh told analysts on the company's conference call that they should not count on a continued boost seen in the past two quarters from new mainframe sales to keep up into the second half. Last quarter, IBM saw its first revenue growth in 5 years thanks to sales of its new mainframe. As we enter the second half, we have a significant headwind on mix because we are not counting on more than a typical mainframe cycle, Kavanaugh said, adding that it would not be prudent for analysts to predict or to predicate our $13.80 2018 guidance on breaking mainframe cycle, even though IBM is capitalizing on some major shifts in technology with new features such as encryption and blockchain in its new Series Z systems. The mainframe, one of IBM's oldest businesses, is still a cyclical business, but its strong sales in the quarter helped IBM's systems business grow 8% to $1.5 billion in the quarter. None of this was good news for investors, and IBM's shares sank nearly 6% in after-hours trading, after the broader market managed to eke out a gain for the day, with the Dow Jones Industrial Average DJIA 0.87% closing up 0.9% on Tuesday. So far this year, IBM's shares are up about 4.9%, while the Dow is up 0.3%. IBM wants investors to focus on its efforts in what it calls strategic imperatives, which made up 47% of IBM's total revenue in the quarter and include cloud computing revenue, analytics, mobile and security. Within those imperatives is IBM's Cognitive Solutions segment, which includes software, analytics and its highly touted artificial intelligence platform, Watson. IBM's Watson is the first commercially available AI platform that can interact in natural language, process vast amounts of big data and learn from interactions with people and systems, and it is integrated throughout the company's Cognitive Solutions business. Cognitive Solutions, which includes solution software and transaction processing software, was up 6% to total revenue of $4.3 billion, a slightly slower growth rate than the systems business. Kavanaugh only said that Watson Financial Services had a strong quarter, but did not give any specific numbers. Our first quarter results reflect much of the work we've done to reposition our portfolio and our skills to address the secular trends in the market, led by the phenomenon of data, Kavanaugh said. I've said that IBM's overall strategic businesses are not growing fast enough for investors, though IBM's 15% growth in strategic imperatives in the quarter was generally in line with estimates. The bulls were hoping for a clean, modest beat on this key growth segment, which represents the underpinnings of the IBM turnaround story in 2018 and beyond. I've said in a note to clients. In an email, I've said he does not have an estimate for Watson itself. It's a major contributing factor to strategic imperatives and helping drive double-digit growth, he said. Bernstein research analyst Tony Sacconaghi wrote in an earnings preview that he believed much of IBM's first quarter growth in its strategic imperatives was driven by the mainframe. Notably, we believe that the mainframe cycle contributed about 400 basis points to Q4 17 strategic imperatives growth as well, Sacconaghi wrote in a note to clients. The upshot is that when IBM laps on the mainframe cycle in second half 2018, we could see headwinds to strategic imperatives growth, with reported organic growth in strategic imperatives as low as around 5 to 6% at constant currency in Q4. IBM is still in the midst of a turnaround. In a nutshell, patience is wearing thin on the street around the IBM turnaround story, which continues to be elusive, Ives wrote, adding that the quarterly guidance is adding more uncertainty to the story.